Hi and welcome to this session on basic superannuation, and this is the last session that I'm going to cover around the basic things. We're going to start talking about different types of self-managed super fund in the next series and the complexities behind those, but this really wraps up the superannuation basics lessons, and this one is around its impact on businesses. So what does it mean for your business clients to be existing in this superannuation environment? We're going to talk about some things in relation to when you have to pay the superannuation, how you have to pay the superannuation, and what the current technology changes in systems like single touch payroll, how that's going to impact on you, the employer, or on your business clients. So first of all, as I've mentioned earlier on, when superannuation guarantee first came back in 1991, there was a 3.5% or a 3% initial part of your salary had to be paid off to the superannuation funds. It meant that employers were withholding some of the money. They weren't giving it to their employee because they had to make, the government didn't trust the employee to make the payment. They made the employer who was making the payment withhold it from their pay before tax and then pay that off to a superannuation fund. Now they had to do that. So some rules had to be put in place about when the employers did that, what sort of superannuation funds they could put them into. Now, I'll give you a little bit of historical perspective on this. It used to be a great lark for small business owners to set up their own company superannuation funds, pay all their employees super into that fund, and then use those funds to help support the business. So that used to be a great old lark for the employers. The people really didn't understand what superannuation was on about in the early 90s and the late 90s. They didn't understand superannuation all that well in Australia. So they really didn't know. And there was a lot of small business, medium-sized businesses running around using the employer's money for their own purposes. So all of that, of course, was tightened up. So that's no longer able to be done. And there's some certain rules that have come around when you have to pay that superannuation. So from a business perspective, what we need to know is that 28 days after the quarter that the superannuation payment was in relation to. So if I paid an employee in January, February and March, that was the January to March quarter, that would be due 28 days from the month following the end of that quarter. So that is the 28th of April, or the 28th of July, or the 28th of October, or the 28th of January. Now, these are very, very important dates because if you miss that date, then a very, very big penalty comes on the business, and that is that the payment is no longer tax deductible. So even though you've spent the $10,000 in superannuation payments because it was part of the employee's wage, after all, you should have got a deduction for how much you actually had to outlay. If you're late by even one day, you do not qualify to get a deduction. Now, people used to play fast and loose with that. If you missed by more than 1 month after the date that it was due, then you had to do something called a superannuation guarantee payment. And you didn't pay that to the superannuation fund, you paid it to the tax office. And the tax office calculated how much interest you should have paid on that money because you didn't pay it early enough. And that money they charge you extra, and they also charged you an administration fee for the hassle of doing the way that you did it. Plus, you didn't get a deduction for any of it. So that was a massive penalty for businesses. Unfortunately for the tax office, they really couldn't see too well what was going on because it was all, the books of the company, and no one really had any visibility, even though it was a bunch of data. No one really had visibility. Now, because of the complexities in income, I mentioned before that if you earned more than $250,000, then there were different tax treatments. The government recognised, and there's other things as well that impacted superannuation payments and taxes and other things. So the government recognised that it needed to know the information sooner. So it started a system called SuperStream. Now, SuperStream was great for businesses because what it meant was that instead of paying, because we have superannuation choice, which means employees can choose what fund to put their superannuation in. And they have a wide range of choices, which I won't go into in this video, but just suffice to know that people can choose where to put their superannuation. It's not the employer's choice. But the employer used to have to, certainly if you were a large enough firm, employers used to have to pay 10 different superannuation funds, and some of them wanted money certain ways and others other ways. It used to be a big deal to pay superannuation payments. Since SuperStream came in, you just pay all of the money to a clearinghouse, and the clearinghouse automatically puts that money into the superannuation fund. Now, it also does something else. It transmits the data to the superannuation fund in an electronic format. The reason it does this is real-time reporting straight back to the tax office. So the tax office knows more quickly what contributions have been made on behalf of what taxpayers. So it can do its calculations and work out who needs to pay more tax and who needs to get a tax benefit. Then we've got another thing coming along that starts for everyone on the 1st of July. It's actually starting a little bit later for all businesses, but it's called Single Touch Payroll, and I'm sure you're familiar with that. That's where you're going to be reporting your earnings and superannuation. You don't have to pay it, but every time you make a payment to an employee and you withhold some money, either pay-as-you-go withholding tax or superannuation contributions, the government knows. So there's no paying late anymore. Once you're on the single touch payroll system, if you pay late, you definitely will not get a deduction. So in the old days, what I was saying to you, people used to just pay a little bit late, it doesn't really matter, and no one's really going to, unless the tax office did an audit, they wouldn't catch you, so you'd still claim your deduction. It was all self-assessment. Now, everything's going to be transmitted electronically, which means that you don't have that option anymore. So moving forwards, the government will know exactly when your superannuation payments are due, and everything gets done electronically. It's a lot more efficient for businesses to do it that way. They're just paying part of the employee's salary, so it's not like that they've got an additional impost on them. It just means that they're going to be paying that money on time, or they're not going to get a deduction. Simple as that. That's all I wanted to say in terms of the general business environment. Large companies that employ many, many people still aren't subject to superannuation choice. But now that SuperStream has come in, most of them will give the employees access to put their money wherever they like, because they don't actually have to spend hours and hours directing payments off to certain superannuation funds. So the clearinghouses that do that just take one payment and it's all good, once a quarter. Or monthly. You can pay quicker if you like. So that's all I wanted to mention. That caps off the Introduction to Superannuation course. So hopefully you know a little bit more about superannuation, what it means for the Australian environment, what its historical context was, how it's taxed, and what it actually means for business. And some of those terms like concessional contributions, it's starting to get a little bit of complexity in it. Now, in our next series, we're going to be talking about the different types of superannuation fund. And of course, we're going to come back to our very favourite self-managed super funds, which is only one type of superannuation fund. But it's important that you know all the different types of superannuation funds that are available for people to pay their money into. That's all for today. Thank you.